Man, there is a narrative which you're sleeping on. It's a narrative you know. We have spoken about at length, but you're not bullish enough about it. In this video, I'm going to help you understand why layer 2s must be part of a balanced portfolio. I'm going to try to explain how I go about building my layer 2 portfolio as well. We know that Ethereum continues to be the dominant layer 1 solution in the space. Many said that once we had ETH 2.0, we will no longer need these layer 2 scaling solutions, but has that really been the case? We are seeing some very, very interesting metrics in the layer 2 space, and if you do not have a carefully crafted part of your portfolio that is dedicated to layer 2 solutions, you are missing an almighty narrative heading into the next bull run. Check out Bybit, links in the description if you want to buy any of these tokens. Now guys, and as you can see, Polygon Matic is the biggest, sitting at $6.9 billion here in market cap during a bear market. Arbitrum made a huge splash on the scene, sitting at 1.6 billion. And then you've got Optimism sitting just under $1 billion here. Those are the three key leaders here in terms of Ethereum layer 1 solutions. But then you have others, right? You have Immutable X, you have Loopring, you have ZK Space, you have others as well, which we need to take a look at as well. Now, this is not meant as a deep dive comparative video of all of these. If you want to see a breakdown of layer 2 solutions, what's the difference between optimistic, what's the difference between ZK rollups, you're going to need to watch this video here because we've covered that already. But we need to get an update on where the space is. I want to start with this. Look at the total value locked on layer 2 scaling solutions right now. We are sitting at $10 billion here in the bear market, but look at the growth. Look at the growth of the amount of total value locked. 6 billion of this being in Arbitrum, Optimism mainnet coming in next at 2.4 billion, and then your ZK Sync at $500 million. So we can see that there is money there. There is total value locked there, even in the depths of a bear market. Now, the other thing we need to understand is that these layer 2 solutions are extremely profitable. And this is one of the things a lot of people don't understand. Take a look at this. May 2023, that's just a couple of months ago, Arbitrum are said to have delivered an annualized run rate of their revenue at $115 million. This is a revenue generating machine, and they're only just getting started. Look at the growth here, guys. If this is not exponential growth, I don't know what is. And a lot of people are wondering, how do layer 2s generate their revenue? Well, they generate their revenue through two key things. One is, of course, the transaction fees, but two, also the miner extractable value, okay? In other words, they have a sequencer, right? So layer 2 sits on top of the layer 1, and there's a sequencer. And that sequencer is responsible for, in essence, buying block space from Ethereum, the layer 1, and then when they take your orders, they reorder them, they batch them, and then they submit them down to Ethereum. So they're buying and selling. That's all they're doing, okay? And you pay the fee for that. Now, of course, they have costs of doing business as well. Let's take a look at some of their costs. And you can see here that Ethereum generate revenue of 6.5 million a day. Okay, so you can see here, 1 day fees are 6.5 million here on Ethereum. Are they collecting 700,000? So you can see what people are actually paying fees for right now. We talk a lot about token prices and looking at the TA. What are people actually using? Ethereum is still generating the most fees. If we then dive in, you can then see what the transaction fees are using a layer 2 solution, because right now, Ethereum sits here at about $1. Whereas if you compare that to Optimism, you're talking 6 cents. 6 cents on the dollar. That is huge, right? That's a huge difference. And if you're looking at swapping tokens, it's $4.80. So you can see here, whether it's Loopring, whether it's Polygon, ZK, EVM, whether it's Optimism or Arbitrum, it's a huge variable there in terms of the transaction fees. On top of that, these different platforms have their own costs. So we spoke about their revenues. They, of course, have their costs as well. So Arbitrum will have to pay their security costs, as will Starkware, ZK Sync, Polygon, DY/DX, Metis. They all have their costs as well, which you can take a look at. And when you look at the difference, that is when we're talking about what they're left with. If you take a look at this, Ethereum currently generates $3 to $5 billion on an annualized basis. ZK Sync is running at a run rate of 115 million already. But they're doing that at a 30 to 40% net profit margin. That is not too shabby at all for them to be pulling in around 50 million in profits, right? That's not a bad run rate for them to be going at. So you're actually seeing that money is coming in through these layer 2 scaling solutions and it's being used. Now, my thoughts around this, guys, is if you're investing in Ethereum, and you're rightly so to be investing in Ethereum, right? It continues to be the primary place for people to build their smart contract, and it's the main place that people are using. I just showed you that based on the fees, right? Everybody's using Ethereum despite the high fees. Well, what you then need to understand is some of that will be cannibalized. Some of that demand for Ethereum will be cannibalized by the layer 2 solution. So if you're just investing in Ethereum, you could miss out on some of the movement of the Ethereum ecosystem if you're not investing in some of the layer 2 solutions as well. And that is why it's important, and I have this for my personal portfolio, of course, not financial advice. It's for you to build your portfolio as you want. I would not be comfortable if I did not have some of these bigger layer 2 scaling solutions as part of my portfolio. And full disclosure, the top 3 here all have a position in my portfolio. Now take a look at this. Look at the layer 2 transactions. If you look at the red line, that's the layer 2 transactions. It's completely come from nowhere and crossed through the number of Ethereum mainnet transactions. Look at that exponential growth there. So here on a daily basis, you're getting 1 million transactions being pushed through Arbitrum. You're getting 500,000 through Optimism. ZK Sync Era is pulling through 750,000. So we're seeing a lot of transactions now going through layer 2s, and you can see this crossover happening here in the last 6 months where it crossed over and now is well above Ethereum in the number of transactions. Now, of course, before investing in any of these projects, it's important that you take a look at the TA. It's important that you look at the tokenomics. This video isn't meant as a tokenomics breakdown. I have done some for some of these projects already, so definitely check out the channel. But if you look at Matic here and you look at the Fibonacci retracement from swing low to swing high, you can see Polygon has done pretty well. It has had a retracement here since February of this year, but you can see it's held up pretty well. It's not at its 0% level. And you can see here that comfortably to get back to the Fibonacci golden pocket here, 0.618 to 0.65, you're talking a $2 Matic, right? And I think that's quite a comfortable goal for Matic to be reaching. You're then looking at all-time highs at about that $2.90. Again, I think Matic is going to surpass that. That's my personal conviction on this project. And then more excitingly, looking at the Fibonacci extension to bring you to that $4.52 mark, which is, of course, your more exciting token. And a nice risk to reward here on a project, which is sitting at 74 cents right now. Similarly, we can take a look at Optimism. And of course, this has had less trading history, so the TA is going to be less relevant. But if you look from swing low to the swing highs, this is a project that's already been at $3.29. Again, not meant as a tokenomics breakdown. There are some flags on the Optimism tokenomics, which I have shared in a past video as well. We'll have to keep an eye on that in terms of its circulating supply. But still, $1.50 right now. It's been as high as $3.20. I still think there is potential here as the layer 2 and Ethereum ecosystem continues to grow. And of course, Arbitrum here with even less trading data here on the weekly chart. But again, this is about identifying the narratives and slowly DCAing a cost basis in. Many times in crypto, you'll spot a narrative before you spot an obvious winner. It's not obvious who's going to win this layer 2 space. Is it going to be Optimism? Is it going to be Arbitrum? Is it going to be Polygon? Or is it going to be a new entrant in the market? It's difficult to tell. But one thing that's for sure, as a good investor, you can spot the narratives and you can allocate positions to each of these and see which one plays out. You don't have to pick one. And that's the beauty of being an investor. If you can catch the wave correctly and allocate and DCA smartly into positions over time, when the rest of the market participants flock in, when it's obvious that layer 2 solutions are growing and scaling and hugely profitable, that's when you're going to get your value add. A quick warning on layer 2 scaling solutions. This is something that you've been procrastinating. I definitely recommend that you do a deep dive into layer 2 scaling solutions. Take a look at your portfolio and see if there's any room for some of these projects which we spoke about here in today's video. Let me know your thoughts on layer 2s. Which one's your favorite from the ones mentioned? Are there any I didn't mention which you're particularly bullish on? Let me know in the comments. Don't forget to go watch this layer 2 video here to break down the nitty gritty and compare ZK, Zero Knowledge versus Optimistic. And I'll see you in the next one.